Let's get to Justin Smirk, chief economist at St. George Bank, for his assessment. Justin, sugar is the second best performing commodity this year. Some like Commerzbank now predicting it may get to 40 cents a pound in August. Bold prediction or not?
It is a bold prediction. I'm probably not quite that bold to get out there and say that it can get to 40 cents a pound. But I also would say that I think you're right in sort of talking about this as being a perfect storm. And what I've learned over my years of being in the markets is sometimes the bold predictions can be the ones that can come forward and rise to the fore. Why? We've actually seen 2 years of underproduction globally with problems in India. Brazil this year really came to the fore with degrees of the level of its underproduction. Also, we've been seeing reasonably strong demand coming out of many of the importing countries. A year ago, many countries held off in going through strong imports, particularly places like Indonesia and India, hoping that prices would fall and they could import more this year at a lower price. That hasn't worked, and they've come into the market now by putting in strong orders as well. So you're right, there is a perfect storm on the supply and demand front that we haven't seen for a very long time in the sugar market. And while you can think that prices in 12 months' time could be significantly lower than they are now, there is still plenty of upside risk, and that $40 a pound, as I said, I'm probably not bold enough to go out there and forecast it myself, but as I've seen in this market, it's not and it's not really a wild forecast.
Some talking about speculative money, hedge funds and large speculators buying to long positions in sugar futures. If funds take profit, then fair to assume sugar prices may decline and end the current rally.
Well, I'd probably argue that if you saw that happen, and there has been a lot of speculative activity and it's been increasing, and that's been one of the reasons why I'm a little bit nervous about pulling away from saying that it can't make 40. What I'd probably argue is if you did get a small dip, under the current fundamentals, unless you saw that shift between now and August, the speculators would come back into the market and start pushing in higher again because the underlying fundamentals are so tight. We haven't seen stocks. We've got less than a few weeks worth of supply of sugar relative to demand out there now. It's something that we haven't seen for a very long time. So speculators are pushing the market harder, pushing it higher, increases volatility, but it probably doesn't mean we've seen the end of the rally just yet.
You indicated there are supply shortfalls. How serious are the problems on the supply side?
Well, when you think about it in terms of, this year you're looking at India becoming an importer of sugar, and quite often they're a major exporter. Brazil, both in terms of their production shortfalls, are driven by both weather conditions and the shift towards higher use of ethanol. And it's a very much of a strong global phenomenon. Also, the demand side has remained very, very firm around these current high-level prices. Now, you really aren't going to get another season coming into the fore until the second half of this year, which is why the futures curves in the market and everyone generally is talking about the market peaking sometime in the first half of the year and by August falling away. So you've really got that period of time where there's no new supply online, you can't find any more sugar, it takes time to grow, and you've got that gap to fill. And that's why you've really got a lot of upside pressure still. Even speculation can push it higher from this point onwards, and that's why 40 has to remain a risk.
How about China, though? Can China meet its domestic demand from its own production?
At this point in time, they seem to be, at that point, they seem to be able to make it. You've got issues around their own sort of supply conditions. You've got also issues about what they can do in the more medium term as well, which is perhaps a bigger question for China. But right here, right now, in the short run, everyone's sort of production is pretty much in the bag, and there's unless someone's hiding or keeping something off the market, and I guess China is one part of the world where that could be generated and could be achieved, I'd probably argue you've still got that tight position, and theoretically, China could actually become a bigger importer than what we think right now if their production falls anywhere near sort of short of what they're currently talking about.
Justin Smirk, we have to leave it there. Justin Smirk, St. George Bank, thank you so much for your insights today.